All right, the Fed rate decision comes out in about an hour and a half. You can really just feel the tension and the eagerness to see what's going to happen here. Uh, I can feel it. I can feel it. All the investors, all the market, all the business people, we are all awaiting this decision. My personal prediction is that it's only going to be 0.50. Uh, and the reason why I think that is because the Fed has been very easy on their tightening this whole time. And I think they're going to just keep going on that route. Could they pull a 0.75 here? Yeah, I mean, it could happen, but I just don't think so. So 0.50 is my prediction here today. And I do think stocks may go up a little bit after this rate, and maybe even we might even have a nice little run for the next month or so, because that's what's happened on the last one. So we'll see what happens here. I'm very eager. I can't wait to see what happens here. Um, but as you look at the I don't want to say the big picture, but the medium sized picture of what's going on here. We had all the unlimited QE, we had all the massive helicopter stimulus out there. That brought on big increases to the stock market and people having cash and people spending money. And now we're seeing some tightening. Also, we're seeing a lot of inflation. And in turn, this has made the Fed start going back. They're starting to tighten. They're starting to take away some of that money. And the big question is what's going to happen next? What's really going to go on here? And as I really look at things, of course, if they take everyone off of that free money, people are going to be spending less. And we're already seeing that in the earnings reports of the big consumer companies. Target, Walmart, Amazon, they all have humongous amounts of inventory. And the reason is because people aren't buying. People aren't buying the stuff they were at the rates they were. Now you have their inventory warehouses filled up with stuff. So, as we look at everything go on, right now everything still looks pretty stable. Yes, we're going to take a little bit of a correction, of course, and I think that was always, as far as what I saw, that always was there. We were going to have a correction. There was a lot of businesses out there that were way overvalued. There was a lot of prices out there that were inflated due to all the stimulus. There was a lot of sales that happened because of the stimulus. Now that's all going away. So I think we're in a good correction here. But what a lot of people aren't considering is that what if you have another crisis? And crises always come up when you don't expect it, right? What happens if there is something that goes on, Of course, in 2009, we had the housing crash. We had the coronavirus crash. There's all kinds of things that could happen. If there is a crash right now, we're going to be in deep doo-doo. We're going to be in deep crap. Not to mention that there are some things out here that I think people haven't fully priced in the market. The first is realty. Realty is still sky high. It's still incredibly high. I was looking at prices in Florida. They're still raging out of control. And all over the place too. There's other places too, but Florida was it was blowing my mind. I couldn't believe the prices and how they're skyrocketing still. So we have that I think maybe happening, may hit people kind of for a surprise here. And then on top of that, we have the earnings. Okay, earnings are not going to be good for a lot of companies. And this is going to hurt their growth. people are going to look at that and they're going to want to sell some of their stock. So we have both of those things coming as well. So be on the lookout as the summer goes on here and these things start to show their ugly heads. If you match that with the Black Swan event, who knows what's going to happen? Where all of a sudden it comes and it pops out and you're like, oh my God, what would the Fed do? Of course, the main answer right there, you're going to say, well, they're just going to pump out more money. But can they? Inflation's already high. Can they pump out more? Can they do that? How much more can they actually cut rates? They're going to be at 1.25 or something, 1.375 maybe today after the raise. What are you going to do? Okay, your power to correct the situations, you got a lot less ammo. We already spent all that ammo on coronavirus. So of course, I mean, this is always the situation. There could always be a big problem, but we may be having something in the future here. And I look at things as the lowering of interest rates the last 40 years, the inflation. There are things out there that are kind of aligning the stars to a perfect storm. That could happen. I'm not saying it's going to happen, but I'm kind of looking at some things here, and it's aligning. Some things are aligning here, and and I'm not going to say that it's going to happen now at all, but I think in the next 4, 5, 6, 7 years, I think we're going to see some major stuff happen. So anyways, that's my prediction for today, 0.50, and see you later.